Taking a live look at the White House as President Trump is threatening China with even more tariffs after it raised its taxes on U.S. imports. Other countries, however, seem to be lining up to negotiate.
Israel is one of them, with Prime Minister Benjamin Netanyahu meeting with Mr. Trump at the White House. Rebecca Castor explains.
Israeli Prime Minister Benjamin Netanyahu arriving at the White House Monday afternoon to talk tariffs with President Trump. The first foreign leader to do so since Trump announced those massive import taxes last week.
We will eliminate the trade deficit with the United States. And I think Israel can serve as a model for many countries who ought to do the same.
Israel has already lifted its tariffs on American products, but Netanyahu is hoping to put global trade relations back in order as markets across Europe and Asia plunge.
We've been ripped off and taken advantage of by many countries over the years, and can't do it anymore.
Trump told other countries not to retaliate, but that's exactly what China did, slapping an extra 34% tax on U.S. goods starting Thursday. If Beijing doesn't reverse course by tomorrow, Trump plans to hit back with an additional 50% tariff.
I'm sick and tired of these foreign leaders saying, oh, how dare Donald Trump start a trade war when these countries have tariffs that are multiple times higher than ours are.
More tariffs could bring more uncertainty to the stock market, leading to more roller coaster days for investors and consumers.
I'm staying in this market because I believe what he's doing over the long haul will benefit our country in a number of ways.
Economists are saying the possibility of a recession continues to rise. And who suffers? The individual, the hard-working American.
The White House says 50 countries have reached out to negotiate on tariffs, including Japan, Canada, and Mexico. In Washington, Rebecca Castor, Fox 32, Chicago.
Rumors caused the Dow's largest intraday point swing. We'll talk more about that in a moment. But first, stocks ended mixed Monday after a wild day of trading. The Dow dropped 349 points. The S&P 500 fell 11. The Nasdaq rose 15. To help break down today's Wall Street headlines, we're joined by Ross Mack, a financial expert and co-creator of Mackonomics. Love that title. I guess I'll start here. A bogus rumor President Trump was considering a pause in tariffs briefly lifted markets today before the White House shot down those unfounded reports. With dozens of countries now negotiating, is this a glimmer? The market volatility could be short-lived?
Yeah, Terrence, thanks so much for having me. What I will say is it's a great sign that it showed that the markets want some type of relief, and what that relief can come in is in the form of people coming to the negotiating table, right? Obviously, right after that, right, we literally saw the Nasdaq being down around 5%, and from there, with that rumor, we literally saw the entire market almost turn positive. And what I will say is the average person is, the average investor, so to speak, is looking at this and saying, hopefully we could get some type of breathing room. And in that instance, it was hopefully a 90-day pause to actually have the president come and be willing to negotiate. However, right now, it's still looking as though the president might be wanting to continue to play hardball. I did see a report out that he might be willing to speak with Japan, and I think that will now be added to, what was it, Vietnam from this past week. But nonetheless, right, I think that this is something that, you know, it's hard for investors to try to pick a bottom, so to speak, because there's so much noise in terms of what the president may or may not tweet.
Another phrase we're hearing a lot today is bear market territory. What is this, and what has been the historical impact of bear markets?
Yeah, so by definition, right, bear market means the stock market has traded down over 20% from its highs. And so we saw some highs at the end of last year, and what we're seeing is the market, correction territory is down 10%, bear market is down over 20%. In fact, we opened up pretty much in bear market territory, and as you can see over the course of the day, through the rumors, whipsawed, etc. But historically, bear market territory is a sign that in the current state, it's a lot of volatility, right? A lot of lack of confidence in the market. However, historically, we've seen those are the best times to invest and to also remain confident and steadfast in your overall investment approach.
Speaking of history, let's go back in time. The Federal Reserve helped the U.S. economy recover from the 2008 financial crisis, the 2020 COVID crash, and other bear markets, too. Is the Fed the hero we need right now? What is the likelihood the central bank will slash interest rates?
Great point, right? There's also been a ton of rumors and, in fact, about what this is doing, right? Is Trump, releasing all of these tariffs in a way to actually force the hand of the Fed? And what I mean by that is, does this hopefully have the Fed lower interest rates so that, one, we can refinance a lot of debt at a cheaper rate? It's been a lot of rumors kind of swirling around. However, what we will say is this, right? Jerome Powell, chairman of the Fed, spoke this past week, and he stated, right, this may or may not change their course of how many times they are looking to actually decrease interest rates this year. But what we will say is that the biggest savior to the day will be, the actual administration coming out saying that they are willing to negotiate. And I think that will be quite helpful.
Something else I think you could shed some light on. A lot of people worried about this as well. Could this market volatility lead to falling mortgage rates? Will the housing market crash?
Great point, right? I think if we see interest rates falling, one, that is always a great sign from a real estate investor standpoint. You obviously have the ability to refinance at a cheaper rate. You have the ability to buy a home at a cheaper rate. But what I will say is that, one, I don't necessarily foresee a real estate market crash. In fact, I think we have a lack of supply with maybe a muted demand, but nonetheless, the housing market has, in my opinion, still pretty strong. But overall, what I will say to investors as a whole is I would just recommend, listen, 5 years from now, we're going to look back, and I think the average person is going to say, I wish I had the opportunity to buy more during that time, right? I think that historically speaking, and I'll say this again, all the times we've had recessionary times, like you said, from 08 to COVID, dot-com bubble, et cetera, right? The market itself has went on to recover and also make new highs. So I think that whether it's in the real estate market or it's in the actual stock market, I think this is the time to, one, be disciplined, don't make any rash decisions, and just remain a long-term investor.
Ross, thanks as always for making it make sense. A lot of information out there for people to digest, and you made it easy to kind of understand what's going on. I'm sure this won't be the last time we speak this week, so appreciate your time.
Thank you so much for having me.
All right, take it easy.